Hi, this is Susan, and I'm here to talk to you about Intel Corporation. Investment opportunity or not? So here's the real deal. I used to work at Intel. I actually cut my career teeth at Intel for more than 15 years, which means I've got some skin in this presentation. And I'm going to tell you something that might surprise everyone listening. Intel's not dead, but should you invest in them today? That's the $60,000 question. And yes, I did say $60,000 question because that is roughly what you'd make if you bought Intel at today's price and it hits my price target. So let's dig in. I'm going to take you on a short journey. We're going to pop over to the problem and ooh, have we got a problem to talk about, okay? Then we're going to head over to the solution and you will hear how Intel is basically reinventing itself through partnerships. Then we're going to take a detour over to the evidence because, as we all know, hope is not a strategy, and we need to see if this turnaround is for real. And then we're going to stop over at the verdict. We're going to land there because where I'm going to tell you whether to buy, watch it, or run away screaming. Spoiler alert. It gets complicated, okay? So let's cut to the chase. Intel's current price is at $37, give or take some change, which is, by the way, up over 100% this year. Yep, you heard it here. So if you're sitting there and you're one of those individuals that says, nah, Intel stock that I need to dump, well, the market just simply disagrees with you. My fair value estimate for Intel is between the 45 to 50%, not 50%, $45 to $50 range. Okay. I want to talk about the elephant in the room. Let's just be honest. Okay. Intel has lost over 100 billion in market cap. That's a 54% decline. Ouch to any business. Okay. But let's put this in management perspective. Intel lost the equivalent of an entire market gap that companies like, I don't know, Adobe and Salesforce have. Like, poof, gone. Like, where did it go? All right. I got to be honest. This is one of the first times Intel in over 40 years. So that's been what, since 1986? Has lost this amount of money. Like their checking book has seriously been impacted. They are in the red of $18.8 billion. But let's talk about what went wrong. I think there's three things. One, I think their execution failures. Intel promised their products. They kept promising, kept promising. And guess what happened? They didn't deliver. They didn't deliver. And all of this, why their competitors filled in the gap. It was simple as that. And Intel, they're over here making excuses, going, oops, right? And then second, I think it's their process technology gap. They simply fell behind their competitors. It's that simple. Lastly, it was their strategic misreading. There was a time when Intel said laptops will not work. People aren't going to want them. They always want desktop. Then they also said artificial intelligence, nope, don't think so. Guess what? We all know they were wrong on both accounts. Okay. But here's what I want you to take away from this slide. This misreading, they're fixable problems. It's all about execution problems. This is not an industry issue. So to be honest, I just think Intel just forgot how to execute. And now they need to remember how to execute. So how does a company fix 150 billion problem? Okay. Well, in the technology industry, one makes friends, one makes a lot of friends, and one needs those friends to have lots of money that they're willing to spend. So I believe Intel's transformation strategy can boil down to one idea. They cannot do this alone, and they need help. Let me walk you through one word: partnership. First, there's Apple. There's rumors out there that Intel and Apple, well, that actually Apple is evaluating Intel's product, specifically their 18A process, to manufacture Apple's M series chips. and that would be about 15 to 20 million chips. Could definitely help Intel a lot. Secondly, Microsoft has actually committed their next generation of artificial intelligence chip to Intel's 18A processor product. This is not a maybe, guys. This is an actual, I'm going to give you money, write you a check type of commitment. Okay. Then there's the Nvidia partnership. I didn't see this one coming, to be honest with you, but it's definitely a plot twister for the technology industry. Intel's actual competitor is investing $5 billion into Intel. This is sort of like Coke and Pepsi deciding to make some super soda together. I mean, totally blew me out of the water when I saw that. And then the last thing is the Foundry joint venture. This is where Intel is having conversations and are partnering with hyperscalers. And in case you might not know, hyperscalers are Amazon, Google, and they're looking at possibly between $7 to $10 billion of capital for a joint venture. To be honest with you, this is not about the money. Okay, this is about Intel feeling validated that someone with deep pockets believes that they are capable of building chips. If you're thinking these are just partnerships and talk is cheap, well, you're right. I agree with you. So let's move over to the evidence. If this turnaround going to be real, or is it just the corporate smoke and mirrors? Well, let's look at four things. There's the revenue. So in Q3, Intel posted about a 3% growth from about 7 consecutive quarters of decline. So that was huge, right? This is like, how would I put it? This is like stopping a freight train, reversing it back up, and then trying to get it to move again, right? It takes time. Then there's the capital raise. Intel raised $20 billion from various sources, and it's real money, okay? Then there's their product, their 18A processor. When it comes down to technical stuff, I'm just going to keep it really simple. This product alone can yield, it went from 65 and they were hoping for a 70 by Q4, because if it hits 70, then the commercial viability, which is the commercial viability threshold, anything below that 70 is burning money. Anything above it, we're making money, right? So that's what we really want to do. And I'll tell you where Intel is in a little bit. Then there's the partnership traction. Apple has actually signed an NDA and they're having some testing going on. Microsoft is really exploring the foundry options. NVIDIA is running their CPUs through through Intel's tests. They're testing it through Intel, which is huge, right? And these are not just press releases, people. These are actual work that's happening behind the scenes that people are hearing about. But Intel's still unprofitable, and their operating margin is at a negative 2%, but still a negative. So this means that Intel is still losing money on their operations. Okay, they did get a little bit of pop off in Q3. They did have some profit, but it was actually $5.7 billion. And this came from the CHIPS Acting Fund, which is the government money. Okay. So technically, Intel's still in the red, right? But here's the uncomfortable truth. These partnerships are still in the early stages. They're doing NDAs, they're doing exploring, they're doing testing. It's sort of like dating, right? We're kind of checking each other out. But Intel really needs some marriages. They need somebody who's going to invest with them. They're going to sign some contracts and they're going to give a delivery date, right? We need revenue. Intel needs revenues from these partnerships, and nothing in technology or anywhere happens overnight. We can expect this to take 12 to 18 months at a minimum, right? So let's get to the investment. So what do I want you to do with Intel? I want you to watch. That's my recommendation. I want you to watch Intel. Let me explain to you why I've got this reading, okay, or this idea. If we watch Intel, it could turn around. I believe in them. I've worked for them. They've got this in them. But as we all know, believing a company and buying the stock is not exactly the same thing. So let me give you four reasons, okay? One, they're partnerships. They're still early, but I think it's possible that some of these are going to go through. Their 18A yields 65%. That's still below the 70 threshold, but they're working on it. They're turning it around. We can expect revenue to be 12 to 18 months before we see any type of money. The stock has already got up 100%. So I think it's definitely worth watching. You can see in the other bubbles that I've got accumulative, what would cause them to accumulate and move into a buy. And then I've also got where I think that they're worth downgrading. And these are when like the partnership wouldn't happen, or this is the partnership does happen. Doesn't matter either one. I want you to watch Intel. I want you to watch its stock, and I want you to be ready to invest the minute it goes up. Thank you for watching me. Best of luck.